Our next panel is in English, so I also switched to English just to do a little warm-up, or rather a wake-up. Together with you, I want to check your skills again, this time on cryptocurrency. So, how many companies worldwide accept Bitcoin as a payment method? Is it 15,000, 17,000, or 19,000? So what do you think? 15,000 companies worldwide? 17,000? 19,000? So I thought, how many companies worldwide do we have? It's more like retailers are around about 7 million, and we have 15,000 companies worldwide which accept Bitcoin. So there's still room for improvement, I guess. Next question. Which country is the only country that fully adopted a cryptocurrency as a legal tender? Is it Qatar, El Salvador, or Singapore? Who thinks it's Qatar? El Salvador? Okay, yeah. Next question. How many cryptocurrencies are in circulation? 16,000, 17,000, or 18,000? It's a little bit more tricky. So what do you think? 16,000? 17,000? 18,000? Wow, you see, it's a pretty good audience here. They know their stuff. So you see, this shows that the cryptocurrency industry has a great power. And we've all seen Spider-Man, the movie, and we all know the quote of his uncle, with great power comes great responsibility. How responsibility in the cryptocurrency industry can look like, that's what our next guest is gonna discuss. So welcome on stage Janitor Daniel Seifert, Karen Braun-Munzinger, and Peter Grosskopf, and our host Benedikt Vaupel.
I like your introduction.
Well, thank you, and also from my side, a very warm welcome to the Digital Finance Conference 2023. Our topic for the next 40 minutes will be crypto. We've just touched upon it, and we will dive deeper into the whole debate surrounding cryptocurrencies, and the way forward. So if we look at the last year, Terra Luna, Celsius, FTX, I think we had quite a few blows to the crypto industry in its still nascent stages. And if we are going to the title of the panel, The Day After Tomorrow, in my opinion, it's a little bit like in Roland Emmerich's classic movie. Even during the worst of the ice time and the storm, people are weathering through it, people are thriving and adapting to new circumstances. So today we want to look a little bit at where crypto has come from, where we are at the moment, and where we will head in the future. And well, you've been introduced, but maybe very quickly, to your very left, Dr. Karen Braun-Munzinger. She is the Deputy Director General for Banking and Financial Supervision at Bundesbank. Then next to her, we have Peter Grosskopf, who is the co-founder and CTO of Ultimate by Unstoppable Finance. And then next we have Janet Ho from Chainalysis. And last but definitely not least, Daniel Seifert from Coinbase. And so, if we are starting to dive into this discussion, can we maybe say that the crypto industry, which was a young and growing industry in the last years, has now hit its puberty phase and is basically maturing into a big, mature industry? What do you think? Maybe Karen, you want to start?
So puberty is a tricky one. To be honest, when I look at last year, I think it shows that you need to get the basics right. And that technology does not mean that you can't have really old-fashioned fraud, people not doing things properly, not really thinking about their risks. So it's a bit more like, if you're sticking in your puberty element, figuring out that you can cheat on your exams and it doesn't really help you have a great stable industry as a consequence of that. So the other thing that I think we saw last year is that we still don't have very strong connections between the crypto universe and what we might call TradFi, so the traditional universe. And I think, so for me, the really interesting thing is when we think about the day after tomorrow, when we think about where this industry is heading, which has a lot of promise to it, On the one hand, how do we get the basics right so that we have standards, we are able to deal with enabling people to have confidence in their transactions, but also as that universe emerges, and I think that's still an open question, exactly which functions will it cover in the future, how will that change the system overall? And I think that's quite an exciting question. But I'd say I think we're a bit closer to kindergarten still, where you see lots of potential life paths, but it's not entirely certain whether people will choose to become rocket scientists or pediatricians.
For me, I think if I can jump in on here, actually, to develop a little bit further on the puberty theme, I was like, wow, for me, I'm more worried about midlife crisis rather than something on the puberty crisis, because who knows, once you grow out from it, and then we'll see interesting developments. But I think it's very interesting when we at Chainalysis, going back to look at the data following all these recent market events, I think the bigger question, I think for us, and in both traditional financial industry, crypto ecosystem, as well as in the governments, we need to think about how to come out from all these crises. And what we've seen, interesting data that show that following these events, the funds actually still stay within the crypto ecosystem. So like Karen said, a lot of these events, the funds we haven't seen a sort of like immediate direct outflow back to the fiat currency world. You see that there's like interesting developments, depends on what type of crisis, that funds may go from crypto as a centralized exchanges to decentralized exchanges for a short period of time, or at some point they go to stable coins in the hope that in case they need to jump out to fiat, then they can also make a quicker hop. But I think the bigger question that I want to go back, or the answer that I think we should seek to address, is that yes, there are crises, and no crisis is the same. As we've seen that all the names mentioned, all the acronyms, who knows, the next day we'll have like another event. And I think what we need to really think about is, in the crypto ecosystem, in the fintech ecosystem, we need to learn from what happened before and not make the same mistakes. Like, for example, if we talk about events that involving governance issues, then having the MiCA rules, following the MiCA rules, the markets and crypto assets regulation rules, that would actually help us prevent from following the same mistakes and help us grow through from one stage to another, whether it's like adult or whatever you call it, or even elderly, they can still thrive.
It's interesting. We've heard from puberty, kindergarten, midlife crisis. I would probably characterize it more as and it certainly was a setback. So especially if I think back to the November timeframe with FTX, that was clearly a setback for the industry. And what I would add to what you just said is 2023 and beyond is certainly the time for the industry to look back on its core values, sich zurückbesinnen. So participation, innovation, transparency, and those will be, so building back the trust that we've lost in the last year, I think that's the main theme for me.
Yeah, also coming back to the title, The Day After Tomorrow, I think there's many industries having these day after tomorrow moments. I think there was also one big one in the banking world. So with Silicon Valley Bank, I think we also now in the day after tomorrow stage, and now figuring out, okay, what happened there and what we have to learn. So therefore, I think it's totally normal that there's like a crisis and we get learnings out of that, and really building the picture kind of like what it's in relation to crypto, I think, which is what is not widely understood, I think, for many people, is that kind of crypto and blockchain for itself is a technology. It was invented when the Bitcoin white paper came out as a decentralized payment system. So that's kind of permissionless and out of control of anyone. And so this is where it came from, but it became kind of an industry of speculation. Kind of new cryptocurrencies have been launched and then been traded on exchanges. And I think in this first phase of development, we figured out to have centralized parties that are running the exchanges and running those kind of businesses. And I think what we saw in 23, and that's for me the big learning, was that there's a technology which is in its core fundamentals decentralized and should give like the power back to anyone, and having a non-custodial wallet and becoming your own bank. In phase one, there was a development there, the centralized exchanges and the centralized counterparties that act like a bank, because all the funds and all the assets are in custody over there. We've seen with FTX, which was such a centralized exchange, that they misused their power. Yeah, so people were not having their coins under their control, and they misused it. And in the end, they should have followed banking-like rules. Therefore, I think it's a good development that especially centralized counterparties now become more regulated, a little bit more bank-like regulated. And the question will be, like, there's a phase two, so where decentralized finance also picks up, and all these financial services are delivered in a more decentralized way. What decentralization in that context means, I think that is also up to discussion, because there are different degrees of decentralization. But so definitely it's possible to run financial services in a completely different way, and I think so I'm pretty curious in the future how this turns out, and how much degree of decentralization we can really get.
So you're already basically going to the next step, to the tomorrow of our discussion. But maybe I want to go a little step back to the now. You mentioned it, Janet. MiCA has just been passed through the parliament. I think this has been one of the milestones that we have all been waiting for. And maybe Daniel, as for Coinbase, so what does MiCA mean, and how do you think that the crypto industry in general will be able, or is able at the moment, to comply with this, and to basically balance between regulation and innovation that Peter puts forward in all these new innovative spaces, but in the here and now? What do you do?
Certainly, MiCA is a great step forward. And I think, it's just testament to, even this morning, I think it was used 5 times. And even in some other conferences, that's about what people are mostly speaking about. And I think that is something, MiCA is something for us in Europe to be really proud of. So when we look into other regions in the world, certainly, whoever has followed Coinbase and Coinbase news, Coinbase has been calling for regulatory clarity in the United States for quite a while now. So we're certainly welcoming having this regulatory clarity here in Europe with the markets and crypto assets regulation. And also other regions of the world, I think they have developed or are developing frameworks now and looking towards Europe and seeing us in Europe as having this leading role, and seeing what works, what might they maybe do differently, but mostly they're seeing a regulation that will likely work out really well. And so I think to the second part of your question of how can you balance regulation and innovation, for me it's not so much a either or. So at Coinbase we've always seen proper regulation, sound regulation more as a business enabler actually. And I do think that having this sort of clarity and this guidance actually enables us to do probably innovation even faster.
To add on Daniel's point, I think how to balance innovation and regulation, to me, I feel that the answer is actually technology. So we've seen in the crypto ecosystem, in the fintech system, there is a very wide use of technology, different types of use case in the business sense. We see interesting developments, new developments that we haven't thought of, like 5, 10, sometimes like years ago, or actually 5 months ago in the crypto ecosystem. So we see a lot of the use of technology in the business sense, but do we see the same level or a proportional level of the use of technology in terms of risk management? And I'm not just talking about compliance to regulation, but the broader use of technology by both the industry as well as the governments and the regulators, financial supervisors, to help them understand the risk exposure posed by this landscape, the whole ecosystem, how businesses actually work, how the funds actually work, where the funds goes. And I think all these activities can be easily traced and tracked. Are seen, or at least observed, on the blockchain in a relatively more responsible way, can be in a more privacy protected way. And I think that goes back to, Daniel's first point about actually how to build that trust in that industry. Because a lot of the times, when we talk about that trust, we also based on the sort of like unknown that we don't see, that we don't know. But with blockchain analytics, activities happened in an ecosystem, crypto ecosystem, especially in the decentralized finance ecosystem, we can actually see and understand what is happening there, and then help us to actually better comply with the regulatory rules and also better manage our businesses and to better manage the risks that could happen in the industry or maybe prevent the next crisis.
So to prevent the next crisis, I mean, we've had the cases of FTX, etc., but maybe in a more general sense, Karen. So why is it so important, or what impacts could arise if cryptocurrency proliferate, if we have the mass acceptance, etc.? Why is it so important to have sound regulation and also make use of the technology that's available to us?
I mean, if we forget about the technology for a second, that's just a tool, right? And I think Peter already said this earlier. What we're talking about here is a way of structuring financial transactions in other ways, decentralized ways or centralized, but using blockchain so that you can handle the transactions differently. But the financial system underlying it still has very familiar features from those that we know and see in the economic today. It's fragile, you have a risk, you have uncertainty about how the world around it will evolve. If you don't see the Ukraine-Russia war coming, suddenly your assets will change in value. And so I think the question is, the more that crypto assets, the more that decentralized finance or these technologies play a significant role in helping people and helping industry conduct their economic transactions, the more important it gets to make sure that we understand the dynamics, that people understand what happens when there's a shock in the system, and that we prevent negative scarring effects. So what I mean with that is, the financial world can seem really abstract, and it's just numbers, and at some point, what does it matter? But when you look at the global financial crisis, which is when I, started getting into this world, lots of people lost their jobs. You had huge unemployment shocks that were a consequence of a financial shock, which reverberated back and forth with the real economy, and which doesn't just work its way out really rationally. It can lead to people losing confidence, withdrawing as a consequence of that, for example, their funding or their collateral. That makes industries, that makes firms go bankrupt, and that makes people not be able to pay their mortgage. And then you get these GDP scarring effects. And so the interesting question for me is, how can we, when we look at this industry for the next few years, what can we learn from the way that financial crises or that shocks in the financial system work in general, so that at this point in time, you can already start building in ways of making this less vulnerable to shocks, to crises, and so on, or isolating it from the real economy. I mean, those are the two paths, right? You can have a separate universe that perhaps doesn't scale very much, but doesn't create an issue, but then it's also very exciting, right? And you're probably not really having an impact. Or you can think about what are your safety features within that. And so, I can see Peter already, that's already sparking. So basically, fundamental points, it matters because the economy is only, is a way of everybody being able to live their life. And this has a real impact if it goes wrong. And very happy to talk about specific ways of thinking about that. But I think first I'm interested, Peter, and what you'd like to add.
Thank you. Also to the question, kind of like MiCA and regulation, I think MiCA and regulate centralized crypto was a relatively easy task because our current way the regulation works is role-based, right? And so there's the broker, there's the MTF, multilateral trading facility, and so on. And I think in centralized crypto, these roles are equally to the ones that we know from traditional finance or from centralized finance, and therefore it was relatively easy to find like consensus and map those rules to the centralized crypto players. But still, we have to keep in mind that there is like a underlying decentralized technology, and I wanted to quote on its potential or the opportunity that we have with that technology, because regulation in the end is something also to kind of like protect a jurisdiction. And with MiCA, we now defined again like the European economic area, and so we have regulation over there, and this protects also against projects from outside, or at least also makes them settle with a company structure in Europe, which of course also then has like an positive economic effect for the European Union. But still, if we compare to the traditional finance world today, we have all these islands of regulation, and they're connected with the SWIFT protocol and some Visa, MasterCard, e-money institutes like PayPal. But still, today in 2023, we don't have a really global, real-time based transaction system, which is built on like core technology, like where the money is. And I think the opportunity is here now that we have a technology which is, let's say, very comparable, like of its mindset to the invention of the internet, which was also became a big global phenomenon because there was one technology, open source, and anyone was able to spin up a web server and just connect it to the web, and then you were able to send information. If we would have built it the way we built the financial system, every country, every jurisdiction would have their own web servers and their own protocols, and they would not be connected to each other, and it would be very cumbersome to send an email to the US. And therefore, that's where I vote for, that we... So they're like money is regulated, and also with the MiCA regulation, stablecoins are regulated, and we can use kind of like this form of regulated money on top of this global infrastructure to create for the first time a payments and banking infrastructure which is really global. And I think this is also what the people today who are used to real-time communication, real-time transactions, what we also have to deliver to them because they expect it.
I think Peter raised a lot of good points. I keep thinking, I want to react to that, another point with that. But I will try to stay focused. And I really do want to say on one point about regulation and MiCA is that it's a very comprehensive piece of regulation. It tried to tackle on a lot of issues. We definitely and certainly see some of the similarities with the regulatory frameworks in traditional finance, but I do want to add that they are not the same. And in the sense that if you look at how the traditional finance regulated in Europe, there's the MiFID requirements, which is actually much stricter than what we have in MiCA. And I think right now MiCA has the right approach that in an ecosystem, in an industry that is relatively new, not just in the business sense, but also new to the whole idea of regulation and compliance. We have to start somewhere, and we have to start somewhere that also regulators are comfortable with on that. And I think with centralized exchanges and stablecoins, this is a good start. Maybe Daniel will have other views on how exactly they will be supervised. But I think the point that I also want to add on this is, yes, we talk about MiCA all the time, how good it is, how clear that it will have the rules and how actually get businesses in the EU. But I think the more important point is for how to ensure MiCA to be successful. There are three elements. The first element is basically the understanding of those regulations by the supervisors, because we see that those rules over 300-page, 400-page MiCA rules, they're only just the first level of requirements. Whether every national supervisors, financial supervisors understand those rules and how to actually implement those rules, that will be very important. Second element is also the understanding by the industry. There have been a lot of discussion on what those rules are, how those rules actually operate. Is Coinbase a significant caps? Why that is so? Based on what criteria? There's lots of operational details that still have to be worked out. The last element that I want to add here is also the general understanding of the regulation and the crypto use case, because Peter mentioned that a lot of time regulation protect jurisdictions, but I think ultimately, and actually one of the key objectives of MiCA is also to protect consumers, because a lot of the money that go in, people have vision, have confidence about the industry, about the businesses, and they put their money in, but they actually don't understand the risk that are involved in the money that they invested in. And I think to prevent about what Karen just mentioned about all the crises and people losing jobs and losing their savings, actually as part of the industry, being able to understand those rules and also to working together with regulators to help the general public to understand what does the crypto transaction means to them. And I think that is also another element to how to ensure this innovation and regulation works.
Yeah, interesting that you bring up stable coins. I mean, we heard this morning a lot about digital euro, digital dollar, CBDCs, wholesale CBDCs, retail CBDCs. So I think, this direction was brought up a lot. There would be one element where I would offer perhaps let's say, a critical voice towards MiCA or some of the developments that we've seen in MiCA. I think as Europeans, where we haven't entirely done ourselves a favor is the capital requirements when it comes to stablecoins, so private stablecoins, which kind of make it difficult to operate this commercially viably in a commercially attractive sense in the European Union. And I think that would be one area where I would sort of urge ourselves, in particular because we heard digital euro or CBDCs this morning, to allow the private sector to participate in innovation more. Because I think, we have a track record, I would say worldwide, everybody would subscribe that the private sector has a track record of doing fast innovation and really good innovation, and typically very market-attuned innovation. And so this is maybe one area where I would wish for, let's say, let's introduce MiCA, let's get it running, let's see how it works, etc. But, maybe that's an area we can take a second look.
And I think the big point with MiCA has also been, there's a lot that's in MiCA, and I think we're all reasonably happy that it is here now. But I think there are also a lot of points that haven't made it into MiCA, just because in the debate we knew, okay, we will need a few more years to look at NFTs, for example, look at DeFi, which I think is a very important aspect as well. So maybe to Karen, how is the Bundesbank seeing the potential of decentralized finance or general DeFi? Is that a problem for you, or is that something that you say, okay, we will care about this in the future when it's there, because now it's been all lofty promises which haven't really manifested?
So I think we try to be what we call technology neutral, because it's really hard to be good predictors of the future. And I wouldn't want to sit here today and tell you, I know the future of DeFi. I also think public authorities, it's good to be a bit humble and say, I think our role is to say, we look after financial stability, monetary stability, how do we create the conditions so that we can maintain that? And that builds a foundation on which, innovation, on which on economic activity can take place. So when I look at decentralized finance or DeFi, certainly it's something, that we think about, that we talk about in a number of contexts. One of them is what is the interaction with economic actors that we understand at the moment? In other words, basically, for example, what do banks do? What do other regulated industries do? And do we have a channel either of contagion or in some other way affecting activities that we know are important and that we think need to be regulated? And so the Basel discussions, and just as an aside, I wouldn't recognize that regulation is about protecting jurisdictions. I do think it's about protecting people. And one of the things that we already spend that we've already seen in the traditional area is that cross-border agreements on this is a really important element of making sure that you get that sorted. So we need to understand the channel to traditional finance and the real economy, which at the moment is not very pronounced, right? So that's one of the, I think, really interesting questions for the future. The second part is, how does DeFi develop in general? And I think there, some of the questions for me, in some ways it looks really similar to the traditional financial system. It has a lot of leverage, so you have potential for people to take on risk. It can have issues around complexity, to what extent are you able to understand what happens? So, and it is really fast. And if I think about financial crises, the things that make them difficult to deal with, and why you see banks in financial crises, but not insurance companies so much. Yes, insurance companies can fail, but it's rare that that triggers a spiral. And that's because you have this combination of complexity and speed. And so some of the questions that I think people should think about in developing DeFi is, how can you get a system that's simple enough so that you can understand the second round effects, the third round effects. And the second bit is, how can you deal with risk and uncertainty? A lot of the system will be based on using collateral, I suspect. You know, you're trying to take trust out of the system and replacing it with one, automatic rules, and two, with collateral. But that means you're building in triggers which are linked to some form of economic information, and you're linking it to a form of essentially collateral use, which gets reused quite a lot in the system. So what happens if you have a big event, you have news, and suddenly you have a big spiral where lots and lots of decentralized contracts unwind, and that creates a big lack of trust in the system, whether it's through false news or real news, doesn't really matter. Suddenly, it all breaks down. Who steps in, right? Do you say, in a new world, in a decentralized world, we no longer need the function of a state, of an authority saying, look, trust us, it's okay, because you're replacing it fully with decentralized contracts? That's putting a lot of trust, right, into the code working. And I think those are the kind of things. Is there something like a break? You know, if things go badly, can you stop? Is there something about making it simple? So you know that if X event happens, Y events will kind of then follow. Who will be able to actually understand the code? Because yes, it's accessible, but honestly, the subprime mortgage contracts were also accessible. Didn't matter because people weren't able to absorb the information. So the fact that the information is out there isn't enough. You have to think about, how do you make it simple? You know, how do you make it easy in a context of people having a tendency to want to believe that things will be okay? You know, that we know historically, you will always have people who think those assets are worth something and suddenly they're not. So the system so when we talk about innovation regulation, I think for me the question is not the conflict, but rather how do you also use innovation to think about these sides of things? The unpleasant bit is, what if it goes wrong? You know, and then how do you deal with it? And I think that's an important question to answer early, because then you can build it in as the system evolves, rather than waiting until it's systemic, something goes wrong. It's a lot harder at that point, and it's a really not a good place to be.
Maybe that's also.
So also to jump in, also to polarize a bit, because you were asking the question, who is able to understand the code? And I asked myself, who was able to understand what the Wirecard and kind of like the structure behind it, and Credit Suisse and all, Silicon Valley Bank and so on and so forth, and also all these people who were invested in those companies believed into the regulators and auditors doing their job, and it failed. Yeah, so therefore, I think complexity is everywhere in the financial service industry, and also in DeFi, I must admit. But I think the big benefit, and maybe also to frame it a bit, so I always call myself a crypto realist. So I also don't believe that kind of what we see today in the DeFi world is exactly what will be the future of finance. So for me, DeFi, how it is today, is more like the test drive of how a potential financial service infrastructure could look like in the future. And why do I believe it's so interesting to have a look at that? Because once you're able to run a financial service completely built in code, you're already abstracting from like a lot of the risks that you have in traditional finance, because like where you have like a big organization of people and you have to monitor the processes, but you can't like observe like all the 20, 30,000 employees of a bank, and to make sure that they do everything right. So therefore, I think having a fully automized, completely built on code financial service, I think has a lot of benefits. And maybe to also not, I could talk, of course, a long time now, but to make one example that really fascinates me, and that maybe also already paves the way in the future of finance where I believe it could go. There's the DLT pilot regime as like an upcoming regulation, or already like it's already starting from the European Union, so which means that it's possible to build exchanges and marketplaces that are built on DLT, aka blockchain infrastructure. And I know some people who are kind of copying the Uniswap, so like a decentralized exchange code of the version 3, and applying it, kind of like building an organization that slips under the license umbrella for the DLT pilot regime, and then kind of like is little bit more permissioned than it's usually, but it in the end combines the two worlds, and that's what I really would love to see in the future, so that we combine kind of like these two worlds, like the knowledge about like a regulation, what could go wrong, anticipating what could go wrong in DeFi because I think the risk is different. Yeah, so you reduce the risk of kind of like trusting people, but you have like an increased risk when it comes to auditability and security bugs of the code. We learned a lot in the last 2 years. Let's apply this knowledge as well, and let's build a financial service infrastructure really marrying these like the best of the two worlds.
Can I come in really briefly? I promise 30 seconds. Because one, I think absolutely recognize the fact that, you know, the traditional finance is not some isle of perfection where, you know, everything is easy. But I think the point I was trying to make is here we have a approach where we say, okay, we deal with this through governance, to trying to make sure that the right people are in charge, that we have a system, we have ways of interacting that, because we know that it's impossible for a person on the street to say, okay, I'm going to go and look at the accounts of Bank X and then I'm going to understand if they're risky or not, right? It doesn't work. But my point about the risks in DeFi were not so much on whether code is auditable or whether it's well written. I think that's definitely part of it. But it was more, let's say you are building your code so it uses credit default swaps as a trigger, as an example, right? You need some form of connection. If you want economic transactions, you need to base it on something. And that something might break. Right, it's a very thin market, and we see already that we have some tensions in the markets, because quite frequently investment funds use automated triggers for transactions, and depending on what those triggers are, that itself can create a chain dynamic. That wasn't very brief. I will hand over back.
But an audience is very enjoying to always see a central banker and a DeFi developer having that conversation. I thought, wow, okay, I want to listen to that. But if I can jump in very quickly, I think we talk a lot about how DeFi is regulated, what type of DeFi is regulated. But I do want, when Karen mentioned about the risks of DeFi, I do want to bring in some of the data that we've seen here. And I think that would actually guide us to answer this question on if and how DeFi should be regulated in what ways. Because right now, when we are seeing the sort of like illicit activities in DeFi or crypto ecosystem, we are talking about 0.24% out of the entire crypto ecosystem. And that is everything crypto included. But if you look at the crypto services, especially on DeFi, they are actually not at least the data that we've seen right now, they are the victims of being hacked by sanction-related entities. So I think that is the sort of like the sort of immediate risk, the more present risk that we've seen from the activities that go on in the DeFi system, and that brings me to question, maybe because I started out doing policies and making policies, then which type of regulation should we be thinking about? We talk a lot about financial stability and also financial, prudential and conduct regulation. But do we see that the scale of DeFi activities reached to that level yet, that we have to jump immediately? Or should we actually step back a little bit and then to focus on maybe for DeFi regulation at this moment, we really need to ensure the sort of like anti-money laundering, counter-terrorist financing, counter-proliferation financing regulation have to be put in place in the DeFi system before we talk about all the things from prudential, from conduct to financial stability. Because ultimately there are so many pieces of regulation that we can work on. The first crypto regulation was developed by the Financial Action Task Force, the International Organization of Anti-Money Laundering. I was at that time very privileged to help develop that standards. At that time, no one in the international financial supervisory world had an idea about crypto. And at that time, we're still thinking about centralized exchanges. So maybe the question that we should ask, or the difficult question of identifying the intermediary in a DeFi system. Can it be possible? Will it be possible? Is it feasible? And does it make sense? Then to actually step back to actually look at the most pressing problem, especially when central banker also confirmed, not to put words into your mouth, but say that we don't see a financial stability contagion issue to the from DeFi to TradFi system yet, but maybe that's a conclusion that I should leave it to the moderator to work on.
Karen, back to your point about the linkages. I would agree, but I would say I think the one big advantage that we have here that we're dealing with, or when we're dealing with smart contracts, is that actually make these linkages explicit, because this is actually code that can be audited. Everybody can look at it. So I think one major advantage that I would see there is, as opposed to a system today where, and we've just had First Republic Bank a couple of days ago, and we had Silicon Valley Bank, and we can trace it back, where even the regulators who were supposed to look at that in detail, either they didn't look well enough or they didn't have enough transparency. So I would say with smart contracts, at least the advantage would be that we would know, or we would be able to look, and we would be able to see these linkages. I think one of the tricky things that, and the jury is still out how that will work in the future, is if we want to regulate that, who do we even regulate? Is it the developer who's putting the smart contract out there? Is it, and that's typically decentralized, right? That might not be even one person or one entity in one single country, right? That could be like across countries. Is it the users? Is it, I think that's a very tricky question still to be solved.
So I think with this, we have a lot of tricky questions still to solve, and we will definitely have more panels on this because we need to discuss this in more depth. But for now, our time is up. Thank you very much for this very insightful discussion. A big round of applause for Karen, Peter, Janet, and Daniel. Thank you very much.
Thank you.